Hello and welcome to Stock Market Fever. This Tuesday, May 24th, before the market opening, another big-name retailer will be reporting quarterly earnings. Best Buy has confirmed they will announce their first quarter earnings before the opening bell. As this comes following severe market smackdowns following Walmart and Target disappointing earnings and guidance, might we expect more of the same from electronics retail giant Best Buy? In this video we will explore where Best Buy has been, what it has been doing recently, and where analysts see it heading moving forward. And stay tuned to the end, as you also want to see our wrapping things up with our own prognosis and forecast for Best Buy. Retail giant Best Buy describes their purpose to enrich lives through technology, do that by leveraging our unique combination of tech expertise and human touch to meet our customers' everyday needs, whether they come to us online, visit our stores, or invite us into their homes. Best Buy boasts of having more than 1,000 stores and about 100,000 employees in the US and Canada, and also sells direct to consumers online through their websites or mobile apps. As for earnings, Best Buy has been on an upward trajectory in recent years, reporting $5.75 per share in 2020, $6.84 in 2021, as people flocked back to the stores to shop in person, and flush with stimulus money, topping out at $9.84 in 2022. And in sync with Best Buy's rising earnings came rising share prices. 3 years ago in 2019, before the pandemic, Best Buy shares were trading just above the $60 range, and then rising to around the 90s. But then, as America and the rest of the world locked down at the beginning of 2020, shares sank in half, with company shares reaching a low of 48 in the first quarter. But since then, their shares have been on an overall upward trajectory, peaking at 141 last November, almost tripling in value in less than 2 years. Since that time, however, shareholders have been, for the most part, receiving nothing but misery and gloom, as Best Buy crashed back down to earth just above 72 for about a 50% loss in the space of about 6 months. So, with Best Buy set to report earnings, what do industry analysts say? On May 13th, CFRA raised their ratings from sell to hold, when the shares were trading at 88. They did so observing that the stock was already down in tune with the overall market, observing, with shares down 20% since early March, we believe Best Buy's share price is below our view of fair value, which is our $100 target price. CFRA, by the way, had called it correctly back in March when the stock was trading at 109 when they lowered their ratings from hold to sell, noting, "We reduce our fiscal year 23 outlook as revenue growth will decline and margin pressure comes from higher wages and inventory costs." But whereas CFRA has raised their ratings to hold, analysts at both Citigroup and Wedbush have lowered their target price to $80 this past week, with Citigroup maintaining a sell rating. So, where does Stock Market Fever stand? We'll be glad to tell you in a moment, but if you like this video and would like to see more like this, please click the like button and subscribe to receive future stock market news, analysis, and alerts right here at Stock Market Fever. And thank you very much. Okay, back to our forecast. While we do not offer investment advice, we gladly offer our opinion. And in our opinion, we believe Best Buy, as any other retailer, is subject to the same headwinds that have smacked down retail stalwarts Walmart and Target. Retailers' earnings and prognosis were hurt by rising costs for just about everything, from labor to transportation costs, as a result of rampant inflation, and their share prices were brought down to earth in a brutal smackdown as a result. Reflecting this overall negative sentiment for retailers, options traders' put-to-call ratio for Best Buy has increased from its 30-day average of 1.6 to an even higher negative sentiment of 2.6. We think that while much of the share price of Best Buy has been beaten down, there is still a modest decline ahead, even if first quarter earnings come in above the expectations of $1.60 per share. And even if earnings come in surprisingly high, we believe this market meltdown still has a way to go, and that Best Buy will go down with it before it starts to rise again. We therefore forecast it will go down to the $60 price area and bounce around there for some time before starting to climb back up to $70 by the end of the year. But what do you think? Where do you think Best Buy is heading in the short run and long run? Would you recommend buying, selling, or holding? And why? Please leave your thoughts and comments below, as we'd love to hear from you. And please be sure to like and subscribe to Stock Market Fever for future actionable stock market news, analysis, and alerts.